All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's waking up to some tit-for-tat trade war stuff, and it's a little bigger than tit-for-tat here this weekend after going into the end of the week last week with, positive tweets and positive comments from the White House mixed with we're going to drop tariffs if things don't happen. U.S. President Trump started the Twitter feed on Saturday with comments saying that China is expecting to negotiate with the U.S. after he leaves office, and that's not going to happen, that the economy's booming, and he's going to be around for the next term, and China's going to have to deal with him. And okay, great. The politicals will take what they want out of it, but it's up in the rhetoric. Right, it's upping the rhetoric. It's upping the tension level. And then China, here about an hour ago, about 30 minutes ago, came out and levied additional tariffs on the U.S. on about $60 billion worth of goods. And that's in response to U.S. President Trump over the weekend promising that he would levy tariffs on the additional goods that China's shipping to the U.S., another $200 billion worth of goods, saying, hey, everything that comes to the U.S. from China is going to have a 25% tariff on it. So just escalation, absolute escalation of the situation. You can see where the market is set to open. It's set to open at Friday's lows, right? This is where we saw the high volume bottom come in Friday morning, and the market decided to rally up here Friday afternoon, and now with the unfolding of the events this weekend, we're looking at a market that's going to open right near Friday's lows in a fairly bearish fashion, right? In a fairly bearish fashion here, and we know the market vibe, the market internals, they remain bearish. This isn't going to help them at all. In fact, this will probably weaken them a little bit, especially with some of the volatility measures increasing. And then if you look at how sectorally this market is set to open up, it is set to open up in a very bearish fashion, sectorally. So we'll see how it plays out. We could be looking at a market that's green by the end of the day based on a few tweets, but it does look like, the words have been said and the actions have been taken. And there's probably going to be a simmer down cool period of speculation, but not a whole lot of action. But again, it's not going away. It's not gonna end here. It's not just gonna all of a sudden turn around and end. It's gonna be something that's gonna be with the markets here for a long time. With this as kind of the backdrop for the markets, this trade war element, the big risk factor here for the markets and the factor that it's not going away, we have some other things that are going on and some things that are kind of concerning here for the markets and things that, could materialize into something, really, really ugly. One of them is what's going on in the Strait of Hormuz, and this is, if I come in here, let's just go Persian Gulf here. Let's pull up a map. And this is, this is something that was warned about last week, but this is a big area for oil shipments, right? Oil shipping, to the rest of the world, a huge quantity comes through the Persian Gulf, and specifically this strait right here, this kind of small land between the United Arab Emirates and Iran. And it's referred to as the Strait of Hormuz, and I may not be pronouncing that correctly, but you can see it's kind of a bottleneck here. as I zoom in, right? It's quite the bottleneck. It's really the only kind of maritime area for Kuwait to get their oil out. Saudi Arabia gets a lot of oil out through there. Qatar through there. Now the Saudis do have the Red Sea that they can come into here, but this is a huge area. And last week, the U.S. sent warships to the area to try to stabilize the region. Of course, sending warships to stabilize, sometimes doesn't necessarily stabilize. And Iran has made threats that it would attack merchant ships, that it would attack merchant oil vessels if the rest of the world, doesn't take Iranian shipments. Last week we saw Europe kind of reject Iran and say, no, we're not going to take oil shipments from you, as kind of Europe's caught in between a rock and a hard place between dealing with, Iran and the U.S., and the U.S. having sanctions on Iran and basically extending those sanctions to anybody who does business with Iran. So it puts the rest of the world in a rock hard place situation when it comes to Iran. And here this weekend, 4 oil tankers were damaged here in this area, and it's been an area where generally the shipping, there's not a lot of issues. But 4 oil tankers damaged. 2 of them were Saudi. Here, there's no clear cut. This is what happened, or report that this is what happened. You have Iranian officials calling for investigation. United Arab Emirates officials calling for investigation. You have Iran, who's basically saying that those who are looking to destabilize this region are, will be found out. So it's, a bunch of words going on, a little bit of action going on, but tensions here is starting to ramp up significantly, and it's one of the reasons why this morning we see oil up $1 despite S&P futures getting clobbered, right? And when we've seen S&P futures get clobbered on trade war news, we've seen oil drop precipitously, but here we see oil actually moving on higher, even though we have S&P futures down 58 points here this morning. So a big deal, or something that could be a very little deal, but ultimately could blow up into a really big deal, and eyes will be on this region for further action, for further drama there. So the market's waking up to a lot of unknowns, a lot of uncertainty, increased tariffs against the U.S., increased tariffs against China. U.S. President Trump basically saying, look, China can't handle all these tariffs, and eventually Chinese companies are going to come here to the U.S. and they're going to manufacture here in the U.S. and bring jobs to the U.S. And that's not a short-term resolution argument, right? When you look at the tweets and what's been said this weekend, none of it is, hey, you know what, we're getting close to a deal and we're going to make a deal happen. It's all, hey, we're entrenching for the long run because we're going to come out better than the other side. And we kind of have both sides saying the similar thing. And, we see some very provocative language here out of the U.S., a little calmer language out of China. But, again, it's just one of those situations where there's all sorts of speculation on what could happen and how it could develop, and what could transpire here. And the fact of the matter, it's open to a whole bunch of different variables. And but the thing that definitely is not going to happen is it's not going to be over anytime real soon. And we've talked about that in length, right? So Monday morning, 50-point gap down, right? Big gap down, almost 60-point gap down in the market here. And look, as I mentioned when I first jumped on, it's a bearish gap. There's no other way around it. It is a bearish gap. You look at some of the more economically sensitive names, even something like an Amazon. I mean, Amazon's going to react here this morning or have a drop here this morning similar to an earnings report. Wynn Resorts, similar to an earnings report. Bank of America, similar to an earnings report, where we're going to have gaps that, we saw gaps during this last earnings season that were less on stocks around earnings than what they're going to have this morning on this increase in the unknown, this increase in the what the heck, and that's something that we're going to continue to see heavy volatility around. Could we see some bottoming volume come in today? We could. But again, that's just suspicion. But it is one where investors they have to relook at things, and we talked about on Friday as investors look at their weekly charts this weekend, they're going to see some breakdowns that they haven't seen before here this year. They're going to see some danger signs that they haven't seen so far this year, and those are going to be some things that they're going to have to react to as we get into this week. Now, for the 100K challenge, I'll be back on here about an hour after the market opens. We'll go out and make trade decisions here based on any signals that come in and based on the levels that Procter and Gamble trades at. We did enter Procter and Gamble on Friday, got a little bit of rally into the close, nothing too significant. With the market gapping down huge, Procter and Gamble's going to gap down. We'll see how well it holds up. Theoretically, it should hold up pretty well. It's not an Apple or an Amazon or a Caterpillar or a Deere. Speaking of Deere, it got downgraded here this morning, but it's not one of the more economically trade war sensitive names, but, in a market like this morning, everything gets taken down to some degree. And, we even see energy stocks trading lower with oil up over almost 2%. So it's going to be a bloodbath this morning for the entire market initially. Very interested to see how it plays out, how it kind of transpires, and what type of signals we end up getting here. We could be seeing some bearish signals come in on things like Raytheon, which we talked about last week, was setting up for trend, but the direction of that trend not very clear yet. Do we get a little clarity to that here today? Twilio was one where on a gap up this morning would likely trigger a buy signal. It is most certainly not going to get a gap up this morning. Here, let's see if I can log in here. All right, it's just going to do its loop on me here again. I'll have to bring over a different browser. But anyway, Twilio set the gap down pretty significantly here this morning. So chances are I'm not going to get a buy signal here on the open here with it. But we'll take a look at how the signals develop over the next hour and a half, and go out and trade the ones that are appropriate there. As I've been talking, I have noticed a little bit of change going on here with gold. We've seen gold start to push up, and you can see here just in the last 30 minutes this big kind of uptick in gold. There's obviously always talk when the market gaps down that, hey, gold's going to go up off this fear trade, but you'll notice market was near its lows before gold started moving on higher here. So we do have gold pushing on up. Not always clear the news on gold in the short term. Nothing here on this feed. I'll have to check my others, but a lot of times it's central banks, being buyers here, but could see some very interesting action in the gold market as the day continues. Thanks for hopping on. We'll talk to you here in about 90 minutes, and we'll see you then. Take care.